So we're constantly having a conversation about net worth. We all want to improve our quality of life through our finances. But I think it's also time for us to have a conversation about your death worth. Yeah, that's right. It's a little morbid, but it's time for us to start having a serious conversation around life insurance and the role it needs to play in your finances and in your legacy. In this video, we're going to talk about it. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, proper use of life insurance, and the ownership of real estate. I want you guys to like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity. So, life insurance, very controversial topic, very controversial financial product. Many people don't want to have to take the time out to think about anything after death. And the concept of having to lay out an entire strategy financially after your passing is a little bit much for most people. So many people are underinsured. It's unfortunate, but the reality of it is many people are not prepared if something were to go wrong and they were to pass away abruptly. So in this video, what we're intending to do is cover life insurance in its fundamental format and start to have a conversation about where it fits in your financial picture so you can get a better understanding when you're making decisions around life insurance and when you're envisioning what your family or your loved ones' lives are going to look like after you're gone. So what is life insurance? Exactly what it sounds like. It's an insurance on your life if you were to expire, if you were to pass away. It comes in many different forms, but the most fundamental forms are going to be term and permanent insurance. Term is basically what it sounds like as well. It's essentially going to be renting out in the life insurance policy for a term of time. You're basically going to be renting out a pretty decent size, cash value that can be paid out to your loved ones if you were to unfortunately kick the bucket. This is typically looked at as the most purest form of insurance. There's typically not a lot of bells and whistles unless you look into specific term policies that have more features and benefits. In most cases, term insurance, you pay a flat premium, you get a guaranteed death benefit for a guaranteed amount of time. And that's pretty much it. It's kind of like renting. For the amount of time that is agreed upon, you pay it. As long as you pay it, they're making their guarantees. And when that time expires, it's over. Permanent insurance is a little bit more complex. It comes in several different forms of different financial products. In its most purest form, permanent insurance is typically whole life insurance. The biggest difference there is that life insurance policy will last for your lifetime versus a fixed amount of time. There is a point in time where you get to an age where it essentially pays itself out or, hits a point where, it no longer will cover you, but it's literally 100 years old. So whole life insurance is extremely complex and detailed in some scenarios. So you have term insurance, which is going to be your purest form of insurance. And the intention there is literally going to be a very fixed flat payment, a fixed death benefit over a fixed period of time. Whole life insurance is a little bit more complex because it's going to cover you throughout your entire lifetime. And it also has a cash value component to it and a premium component to it versus term insurance that has a straight premium. Whole life insurance breaks out into several different financial products. You have standard whole life insurance, cash value life insurance. You have universal life, index universal, variable life. We're not going to get into the definition and the background of each one of these different forms of whole life insurance in this video. But what I will tell you is that as you branch out into the permanent life insurance space, these products start to branch out from just insurance contracts into financial products that actually can have the ability to make you money while ensuring you a death benefit and sometimes other living benefits. So how does this fit into your financial picture? Depending on where you are in your life, you need to be taking serious consideration with life insurance as soon as possible. You're not too old unless you literally get to a point where you're too old. But as long as you're in reasonable health, even if you're in your 50s, 60s, and in some cases 70s, you can still put a policy in place and give some support to your loved ones if something were to happen to you. The reality of it is You may find a lot more peace of mind without having to think about passing away and having life insurance, because you now know you can work now towards your lifestyle and your quality of life, because your death or your legacy is taken care of when you have life insurance. So you're not working to save a goose egg or, this lump sum amount to try to protect your family if something were to happen to you. You're paying into a product that's guaranteeing, as long as you pass away in a way that's within the terms of the contract, of course, to cover and protect your family, take care of your funeral expenses. How do you portion out how much life insurance you need? This is one of the biggest questions that you can ask. One of the most effective ways to do it is to gauge your monetary value to your family or your loved ones on an annual basis, and then push that out for however many years you would like to cover your family. So if you make $50,000 a year and that's your major financial contribution to your family, and you want to at least give your family about a 10-year window of time where they can be supported by your same income level or the same lifestyle you provided them, the $500,000 policy is probably going to be pretty applicable. And you can do that math on down the line based on your income and your monetary value to your family, and how secure you want them to be and how long you want them to have that security. So one of the most important factors you need to keep in mind is you need to do it as young as you possibly can and as healthy as you possibly can. These are two of the biggest factors that influence the cost of life insurance and how much life insurance and death benefit is going to be available to you and your family. So these are some of the key fundamentals that you need to understand. Life insurance is essential to a healthy financial plan. In some cases, good financial planners won't even encourage you to invest until you have proper life insurance. It's just that kind of support, that underlying support for yourself, or rather for your family, and that peace of mind that's just so important before you start to dig too far into these other financial ventures. I just wanted to open the conversation up around life insurance because I constantly promote it in the intro on this channel, and I am a licensed professional in this space. So I want to make sure that I am opening the dialogue, putting this on you guys' minds and giving you some context, because we're going to dive much further into this as the channel grows along. Thank you guys for tuning in. I hope you found value in this content. I know you did. I enjoyed bringing it to you. I want you guys to stay focused, stay in motion. I'll see y'all soon.